Let's welcome on board Manish Sonthalia as well and find out what he's making of the market, the year gone by and the year ahead. Manish, hi. What a year it's
Good
turned out to
morning.
be, right? And we were just discussing that FOMO crowd which still wants a piece of silver and gold and they're willing to give up on their equity allocation. How do you think the year ahead, though, Manish, is going to pan out? And is it going to be this multi-asset strategy which will still work?
So I think FY27 should be better than FY26 for sure. On the back of better macros as far as India is concerned, vis-a-vis what we saw in FY26, and to mention a few, you have very low inflation, you have very low interest rates, and earnings growth is reviving. It's going to be better than FY26, and valuations have corrected. So all in all, I think given the growth and the valuation and the macros, we should be fine. Only thing out here is that what could be the trigger going forward? I think market is waiting with bated breath as to see the light of the day for the US trade deal. I think markets will wait till March or thereabouts, to give some more time. And if that happens, then that could be a trigger point which could lift the markets definitely higher from here. I think earnings growth trajectory is going to be 12-13% for FY27. And you should be seeing in closer to a 15% upside by the end of FY27.
Manish, 12 to 13% earnings growth. Which are the sectors contributing to that?
So it is the usual your banks. They are going to see decent earnings growth. IT is going to be around 6 to 7%. You'll have capital goods. You'll have NBFCs. You'll have healthcare doing quite well going forward. Some of the very high performing sectors for FY26 like metals, oil and gas would be faced with very high base. So we'll need to see as to how each of these individual sectors pair out. But structural sectors are likely to be faring better. Rate sensitive, within that you'll have real estate, you'll have autos, autocoms, consumption, discretionary consumption, premium end of the discretionary consumption faring much better than the staples, because you'll have a problem of nominal growth. You'll have real growth, and volume growth is going to be the deciding factor because you have very little inflation. So these are some of the sectors which will bring about that growth.
But Manish, within sectors that you talked about, there is a lot of churn which is at play, and increasingly, at least off late, it's more the bottom-up stories which are actually coming to the fore as opposed to what the leadership names or erstwhile leaders have done. Do you think that kind of a phenomena is going to play out? I mean, one is seeing that catch-up trade happen in autos, in banks, and of course, IT, the entire sector is moving up.
No, so again, it is to do with valuations. The biggest concern in the market, because the market is very, very deep. The large caps and the mid caps make up around 250 odd stocks, but below that, it is a very large space. And this is the most talked about space. And here, you can't paint everything with the same brush, saying that everything is very expensive and the mid and the small cap universe is to be avoided totally. I don't believe all that. I think it is to do with individual stocks. So out there, bottom-up stock picking is going to be the key. There is no right sector valuation per se that is very, very cheap or very, very expensive. So yeah, what you're saying is absolutely right, that bottom-up stock picking is going to be the norm. And valuations have corrected massively. So some of the sectors like rate sensitives have a massive tailwind, like rate cuts. Then you have GST cuts. Then you have your income tax cut, 1 lakh crore incentive. All of that will be a kicker in terms of boosting consumption. And the proof of that pudding is basically what we are going to see from the third quarter onwards. So again, out here, the automobile space, the GST cut has been massive. You'll see very strong growth going into the future. You talked about tires. The CV cycle is turning, and if the CV cycle turns, you have and proof of that is basically your your freight rates have actually started going up, and fuel prices are very, very benign. So in all of that, basically guys who are exposed more to the tire space, particularly the MHCV space, are going to be benefit. So All in all, rate sensitives have a massive tailwind. Government is doing its bit to boost consumption, and that is why bottom-up stock picking will be the norm.
Manish, but what's your take on pharma? Largely in the year gone by, and all the sound that we've heard around the US trade deal, pharma has largely been excluded from tariffs, at least the generics bit of it. And India is big on generics. Are you positive on pharma as a sector for the next year?
As long as the tariffs don't get included for generics, we are fine. I mean, India supplies US the most amount of generic medicines, and they can't live without these generic medicines. The healthcare costs are actually going to go up significantly. One space which has seen significant correction is basically the CDMO space on the back of the lingering doubts about the trade deal, what sort of an impact they're going to have on the pharma space as well. Plus your stocking and destocking and delaying and all of that. I think this is one space which is very, very exciting. There is a lot of promise now with the Biosecure Act also coming through. Of course, that is meant for government related work. But nonetheless, the minuscule size of India CDMO vis-a-vis the rest of the world, even if you were to get a shift, a minute shift from what China gets by way of business, there's going to be massive growth. And I would believe that some of the stocks which have seen destocking over the last 6 to 9 months would be there in the base, and thereafter you'll see growth. So more bullish on the CDMO space, both India CDMO as well as the overseas, the new discovery CDMO, plus the GLP opportunity. These are exciting areas in the pharma space where you'll have GLP-1 going off patent from April 26. That's going to be a massive opportunity. I think all pharma companies are very well prepared for that, and we'll see how the growth comes about in that space. So these are spaces in the pharma which look good.
Okay, quite convinced there, but great to have you, Manish, on the show. Thank you so much for your time and wish you a happy new year from all of us.
Happy New Year to you all also. Thank you so much.